Brilliant. Thank you so much for coming along today to this morning's webinar. Apologies for this slight delay in the start. Before we go and look at some charts and see what's going on in the wonderful world of Forex, can I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. Right, I know we've had a bit of a push on a lot of new people joining these sessions, and I'm just going to go through literally very few number of slides to bring everybody up to speed. There's also been some exciting developments with the Forex program as well. Right, where do we start? Well, we start with the chart, and we're going to be looking at the charts through the prism of what we call volume price analysis, and that's really analysing the price action and the volume, because what does that tell us when we look at those two indicators in tandem? It really tells us whether, first of all, where we think the price is likely to be going next, and secondly, it tells us whether what we're seeing happening on the screen is actually genuine or not. I mean, that really kind of sums up VPA, but that might have been, you know, and chart analysis may have been all well and good when we started in Forex about 10 years ago, David, 10, 12 years ago, yeah. Although we were doing VPA nearly 20 years ago in futures and in stocks. Back in the happy days, central bankers kept stumm for most of the time, so you weren't constantly being assaulted by their various comments and views on everything. Social media has a lot to answer for where central bankers are concerned. You know, yesterday I don't know how many Fed speakers were out on the stump, as it were. So basically, it was really pretty much all chart driven. You know, you were kind of aware of there were what was called fundamental news coming out, and for example, non-farm payroll. But you know, really, it was pretty much chart based. Well, you know, things have changed dramatically since we started. You now have to look at not just what's happening on the chart, but you have to look at what is going on in terms of releases. And as I said, we've got central banks come into that into that definition as well. We have taken it a step further, and in as much that we do also look at what's going on in other markets, because the Forex market actually reflects a broader market sentiment. There are correlations within the market itself and with other markets as well. So that's what the book's done. What we have since done, since we started, is we've also developed specialist indicators to help us in our analysis, and we've also put everything together in what we call the complete Forex trading program, which includes all the indicators that we have developed. And this is the screenshot from the education site, and it's quantumtradingeducation.com. Clear what is available in the program. It's a very, very comprehensive program, and you can hop over onto Quantum Trading Education and find out more details. And I mentioned the indicators. The indicators we've developed are available. You can use them across all markets, but we have developed some very particular ones for the Forex market, because markets are all about money and the flow of money into different assets, and they flow into those assets according to whether the market, what kind of sentiment, what kind of mood is the market in? Is it in what we call risk off, or is it risk on? And that is reflected in individual currencies and then currency pairs. It's also driven at the moment a lot of political factors going on in the background, and certainly with the British pound, that is pretty much the case. I'll tell you something about the British pound in a few minutes when we go and look at the charts. So the British pound is one of the currencies that I've got on my particular on my particular profiles. Now, what we've also done with the education is we have actually taken it one step further. This is actually something we've been wanting to do for a very long time. Those of you who are on the program may not know this already, or are thinking investing in the program. You do then get an opportunity to trade what we call a funded account. In other words, you get to trade our money. These accounts, they start from $5,000, and you work your way up in a series of steps up to 2 million. That's right, you can control and you can trade an account that is has $2 million. Now, we've actually got a special webinar coming up on Thursday, which explains this program in much more detail. So if you want to come along to that and you're not signed up already, I'll put a link to, have you got the link, David, for the webinar into the chat box. You can sign up. It will be recorded, so if you sign up, you will get a recording of that webinar, and it really explains in detail what this program can do for you. So that's where we are at the moment. Let me just go back to what's happening in the world of Forex. This is the move, actually. I've changed the layout of my charts. This is actually on MT5. This is for the MetaTrader platform. Just want to show you something that I've put together, which those of you who have the indicators, you might want to consider setting up a profile in this way. If you haven't got the indicators, it will explain in detail. You can see that the principles of VPA in action, volume price analysis, as I said, the interreaction, the relationship between price action and volume to tell us we want to know where the price is going next. Well, that's what it does, and it picks out the anomalies as well, but it also includes support and resistance, candles, candle patterns, and time. Not just time in the sense of the charts that you're looking to trade, but also multiple time frames. And I think this 5-chart combo that I've actually come out with now, I'm always testing new ways of presenting charts and the methodology, but I think this I hope you'll find this might actually help to put everything together in without being too overwhelmed, if you like, with what with what you're seeing on the chart. But before that, very quickly, where are we today in terms of fundamental news? There we are. The in terms of, let's have a look in terms of what's happening. Well, the key one is actually the retail sales, but that's not till this afternoon, and we'll certainly feel the effect of that when we do our day trading session later on, which is 3 p.m. UK time. So there's a bond auction with the pound. I also cross-checked that. Those of you, I know that we suggest financial juice for news because it kind of fills some of the gaps that are in the Forex Factory economic calendar. There's nothing wrong with the Forex Factory economic calendar, but the financial juice one is a little bit more detailed. As you can see, it's got the red book, and also quite interestingly, it's got BOA Bailey speaking at 2. Now, was he over here? Let's have a look. No, oh yes, it's quite interesting. He's only given on Forex Factory. They don't give him a red flag, as it were. They only give him an orange one. Whereas I would have thought anything that he says these days certainly deserves more. You have to pay more attention to him. So that's at 2. Sometimes you will find. Here we are as another example here. You've got BOE, you've got Powell. There's Powell up here as well. Yeah, he's there as well. I use it as a kind of, I do cross-check it. It's not an expensive feed. Certainly, nowhere the price of some of the others. I believe they do a free one, which is slightly delayed, but it's worth it just for the calendar alone. Let's have a quick look over at investing.com to catch up on what is a sentiment. What have we got? Well, the Dow futures are down very slightly. Of course, yesterday it was all about Moderna. Monday, every Monday. Wonder what's going to happen next Monday. Who do you think will be reporting next Monday, David? We will have to wait and see. And what's the Nasdaq up to? Let's have a look. The Nasdaq is up slightly. There's a bit of divergence in the indices. For sentiment, let's have a look. The VIX. The VIX is 22. It's it's going down. I'll turn him off. I don't want to hear him. Yeah, so we go around, have a quick look and see what is happening in background. What is the fundamental news? What are there any news releases coming? What is the sentiment of the market? Well, it has pulled back from yesterday, but it was a good day, not as spectacular as last Monday. Those of you who remember, I think the Dow went up, was it 1,400 points, David? 1,600 points, extraordinary number of points, but there we are. Okay, right, so that was, yes, British pound. Very interesting. Let's have a look very quickly before we go to the British pound per se. What I've done is I have got two profiles with the currency strength indicator, and I've got the time frames, the multiple time frames. I've actually got the minute, the 5, the 15, and on the hourly chart, I've actually put the matrix. I've got two versions of the profile. And this is just tell me basically what are the currencies, what have they been up to? The hourly chart tells me, gives me a longer perspective, clearly. What's been happening in Asia, I want to catch up on the individual currencies and also on the pairs, what's been bought, what's been sold. And in particular, what I want to look at are these values up here on the hourly chart, because if these values are very low, as they are at the moment, you can see the dollar CAD is up at the top here, but look at the value, it's only +8. That tells me that actually there's not an awful lot going on, because on the hourly chart, what I would expect to see is certainly a higher value than +8. Some of these values on the hour, when these pairs are moving, and they're moving strongly as they were yesterday and certainly last Monday, they would go into triple figures. And in fact, what we're doing, and I've mentioned it before, we have upgraded this indicator, the matrix, whereby there will be a note on the indicator itself to tell you whether that value that you're seeing, for example, down here, -20 in this time frame, is it high, medium, or low? It's already available on the TradeStation version of this indicator. And our developers are working on the other versions as well, so it will be available in the coming weeks. So that tells me it's now moving a little, it's certainly picking up a little bit of speed, which is great. But then I look at what I'm seeing on the hourly chart of the CSI. This is the hourly chart, and what am I seeing is I'm seeing all the lines scrunched up here in the middle, and this is telling me that it's all come to a bit of a pause point. It's a lot of, as you can see, everything is intertwined, everything is sort of, as I said, scrunched up in the middle. And what we want to see is some some divergence. We want to see these currencies begin to pull away, as I said, on the hourly chart. Does that mean there hasn't been trading opportunities on the faster time frames? Well, no, of course not, because if we look at the faster time frames, we can see here that this is the minute, this is and this is the 5. And what have we had? We've had some buying of the Japanese yen. Now then we had a overbought, then it came down again. We've got the yen. As I said, I had the pound yen up, and there was a little, not a huge move, but it was a very nice move on the pound yen, and we'll go and have a look at that profile in a minute. And that is obviously reflected on the minute chart. And where are we at the moment? Yeah, it looks like that's going to roll over here as well. And certainly on the 15-minute chart, well, the pound, there's possibly have some more certainly downside on this time frame. Whereas if we look at the hourly chart, it's still in the, that divergence hasn't, if you like, filtered through to the slower time frames. And this also tells us they are picking up. What we want to see, as I said, on the hourly chart, when we have a really nice trend moving, that should certainly move to close to triple figures, basically. You want to see the 40s, the 50s, and we know that there's been a nice move in this particular pair at the top of the matrix, and conversely at the bottom where you will have a minus number. Now you can use this in a number of different ways, because this market is as a continuum. There are different sessions, there are the liquidity depth varies between the sessions, but at least when you come to your terminal, you can kind of see what's happening at the moment. Are the numbers, what are the numbers? And if there has been a strong move, you can say, oh, well, possibly is there a potential for a reversal down on the faster time frames? As I said, this is talking about the time frames that I've got on this profile at the moment. Or is there is it kind of not sort of the maximum, if you like, but potentially it's looking as though it's moving? Is there a potential to join that trend on a correction, on a pullback? And this is where VPA will step in and help you to pinpoint those potential re-entry points along with the indicator. So that's one version that I've done of these special indicators. What I've also done, we always talk about this every week, and we've never put it together, but now I've actually put it together with our heat map here, which is the fourth of the specialist indicators that we've developed for the forex market. And this looks at the 28 pairs across multiple time frames, and you can use this in a number of different ways. You can use it to see whether you're coming up to some big reversals, if you like, from the top or the bottom, or you can use it literally to monitor. So if you've got if you've got maybe positions in different pairs and you don't want to keep flicking around different charts and profiles, what this will do, if I just highlight the pound here, first of all, it tells you where the pound pairs are in relation to all the other 28 across the multiple time frames. But it will also tell you, as the little cells change colors, it also helps you to track whether there's been a move in one direction or the other. So you kind of use it you look at it on a ladder version vertically as it moves up against the other, but also crossways horizontally, but looking at the cells at the same time. And I've got a couple of CSIs. I've done the time frame slightly differently. I've got the hourly here. I've got my slowest one. I use it for my own personal. I use the hourly CSI a lot. I use it in my analysis, and I use it in my own personal trading, because it's like my benchmark for the actual charts that I trade off myself, which is the Renko, and I'll show you on the profile the Renko and the different time frames. But it tells me, as I said, you can see highlighted all these individual currencies sort of still bunched in it, but we're beginning to see some movement. We're beginning to see some buying of the yen. That also tells us about sentiment. We've also seeing some buying of the Swiss franc and the dollar. So, after yesterday's sort of semi-euphoria, we're beginning to see a little bit of a cooling, if you like, of sentiment. And what we're also seeing is we're seeing some selling of the Aussie and the New Zealand, which are the risk currencies. So I've got the hour, I've got the 15, I've also got the array on the 15, which tells me the strength of trend, if you like. This is what this measures, this indicator. Then I've got two of the matrix here. I've got the hour and the 15 because it allows me to track the pairs, and I've got the heat map as well. Right. I was looking at, before we started, the pound yen, and then we'll pass over to David. I don't know what he's been looking at because, right, and this is this new configuration that I've come up, which I just want to share with you. I often talk about obviously time charts, and combining them with what we call a non-time based chart. And on the metaquotes version of these indicators, that's MT4 and 5, we have come up with a Renko. Now, Renko is a brilliant chart. There is no time involved. Each one of these bricks that is formed here is formed, if I put that up here, that's so you see a little bit better, is basically completed once a certain number of pips goes through the market. And I've actually set this to quite a far. I'm not using the ATR function for the pound yen. It's got two versions of the indicator. You have the ATR, where the indicator comes up with the value for one of those these bricks, or you can set it to your own value. And I've actually set it to 2.5 pips. I usually have 3, but it was this morning I just decided on 2.5. What the Renko also does is this. We talk about patterns in trading, and we talk about geometry, and we talk about structure of the chart. And what the Renko does, it gives you a beautiful view of what the structure of this chart is at this particular time. Now, we know price doesn't move in a straight line. It doesn't go straight up and it goes and straight down. It will go up, it will move higher. It will perhaps pause. It didn't pause here. We get a bit of a V-shaped, well, it's not a V-shaped, it's an upside down V, and then it will go down and it will perhaps pull back, and then it will go into this congestion phase. And a congestion phase can be a congestion phase with volatility, or it can be a very quiet, rather boring, range-bound, very tight range-bound congestion phase. This is not quite a congestion phase, because although it reversed, it kind of then sort of drifted higher, as it were, and as I said, and then it came back to test this support line that we have here. Then it went, then if you like, if that was the primary trend higher, did it go into a primary trend lower? Yeah, it kind of went into, would you say that was a secondary trend? Would you say that was a primary trend? This is what a Renko will, show you in a very clean way, as it were. You can see the trends, you can see the primary trends, you can see the congestion phases, you can see the choppiness of the price action. So we had this kind of choppy price action with a vague sort of mild bias to the upside. Then, if you like, that trend was resumed up to here. Then we had a little bit of a pause, and this is the move that I was particularly interested in this morning. This was the one that was captured on the Renko, which was a very, very nice move lower. Of course, it then ran straight into the London Open, where we have the usual nonsense with volatility and traps and what have you. But now this is a really nice primary trend lower, which we've had this correction, and now it's continuing lower. Now, how does that compare with what we saw on the charts? And the way I've set these charts up is I have a Renko. I have a 3-minute, you can have a 5-minute if you have the MT4 version, but crucially on this particular profile, I have a 10-minute, I have an hour, and I have a daily. And the reason I have these two charts up here is because we have a very particular indicator called the Camarilla indicator. What we want to do with support and resistance, we measure support and resistance in quantum and in VPA. We have price-based support and resistance, which are these lines here, either dotted or more solid lines. But we also have volume. We have support and resistance that is volume-based, and that is based on the volume point of control. And this is volume and price over time. And this is the congestion phase that we saw on the Renko chart. It's the VPOC, the volume point of control. The best way I can describe it is we call it the fulcrum of the market. It's that time on the chart when the market is, you can call it fair value, you can call it price agreement. There is a general consensus, if you like. There is no strong bias one way or another. It's where, if you like, the trend has come to a pause, and it will either continue in the same direction, as it kind of did here, as it were, or you will have a complete reversal, and you will also use it for the purposes of breakout trading. So that is how we look at support and resistance in VPA. So this is my time-based chart. So I have a Renko, I have a 3-minute. Now, what we want to do with those support and resistance lines is we want to give them some kind of hierarchy. We want to give them some kind of status. Are some lines more important than others? Fibonacci does that. Those of you who use Fibonacci, certain Fibonacci values are considered to be more significant, as it were, and where price is likely to reverse or not. We don't use Fibonacci. We haven't come up with an indicator based on Fibonacci. Instead, we've come up with an indicator that's based on Camarilla. We've also taken the Camarilla principles one step further, in as much that we have now 6 values rather than 4. I'm just going to move that away because it squashes the chart up too much. And what I've created here are two charts. First of all, a chart that is below the hourly chart, and the reason for that is the way we have also developed this indicator is it works in all the time frames up to but not including the chart, the hourly. The values are refreshed every 24 hours. So these are today's values. And what we can see here, this is the move that we had, as I said, on that Renko, which is a very nice move coming into the London Open. But significantly, it's kind of paused at what is also the S1. Between the R1 and the S1, we call the buffer zone. It's like another kind of congestion phase. You know, price it'll quite happily trade in this zone for however long it wants to before it then starts moving towards these levels. And the way you use the levels, you use them both as potential targets, potential reversal points, and also even for placing stops. So so I like to know, what are my levels for today? Why has it stopped where it has stopped? But more importantly, on the hourly chart, the hourly up to the daily, the levels are calculated once a week. So these levels are in play for the rest of the week. And sometimes what happens is you can be in a trade in one time frame, on a faster time frame, and suddenly it will stop. Yeah, you not for no reason, but you think, oh, it's paused, and you think, well, I can't see anything on the chart that I am at the moment. And this is where multiple time frames come in, because you could be at a level that is significant on a slower time frame. And we can see here this S1 level here, which is at 137.65. We can see it is actually quite a strong support level. In fact, the pair has bounced off it once, twice, 3 times, 4 times. So if this is going to carry on lower, which it possibly is, given what the CSI is doing, because I also have the CSI at the bottom with just the two currencies on it. If this is going to go lower, where do you think this is going to be heading to? Well, the logical point is down to the S1, because the hourly chart tells me. And also, having 5 charts like this is like the golden ratio, as it were. 5 charts are easy to monitor. You've got levels in multiple time frames. You've got the Renko that tells you whether there's momentum, whether there's a pause, is it likely to reverse, and the trend dot and the trend monitor will also help you with your entries and also help to keep you in the trade. On the 3-minute chart, we can see what's happening here. It's looking that it wants to try and move higher. This is the move, as I said originally. The move, actually, we've got this lovely bullish engulfing candle. This was before the open. You've got a resistance up here. It was a really nice entry point. It actually got to the volume point of control. If you missed that bit, it was a really nice breakaway trade. Volume is reasonable. You have to remember the London Open, the volume is always distorted because there's a great inrush of volume. As I said, the London comes in, you do have the buying comes in, as you can see here. But what about, look at the next bar? It's the next up bar which is critical. Look at the volume underneath it. The size of that bar, that volume should be much higher. So that's not going to go. That's not going to carry on much higher. It's the usual kind of trap that we have at London. Traders see this nice move lower, they see a candle, and based on a candle analysis alone, you would say it's like a hammer candle. You think, oh great, London Open, it's been lower. Now all the buyers are coming in. Let's buy the pound. Rush in. There's a nice wick to people call them pin bars. Let's rush in. Up it goes. Oh great, nice nice trade higher. Where do I put my stop? Down here. Bang. You're stopped out. And why? If you didn't have the volume there, you wouldn't know. It's a bit of a weak candle, but that's a classic trap that you get at the London Open. If I just expand that, you can see that better, as it were. And then we had, as I said, then it carries on lower back to that sort of general support area. And now it's looking, possibly, is it going to reverse? this is what happens at the open. You know, this is probably where it's going to go anyway, but you know, let's take out a whole load of traders who jumped in a little bit too soon. What this move also tells you is just to be aware that if you can see a really nice move before the open of the sessions, but when the sessions, you know, about to cross over and a new session comes in, either decide if you've got some profit. Personally, I just take it out or take part of the profit out, and it maybe let one, you know, one small contract run just to see what happens, and go back to the levels. What do we see? We're at the S1. Do we sometimes get a reversal? Yeah, the indicator also comes with little signs, possible mean reversal trade on the horizon, and it is actually doing exactly what it is supposed to do. So you've got these charts, and finally the fifth chart. Let's have some context on the daily. Where are we on the daily? Are we in a trend? Are we in trying to trade in a congestion phase? Because that tells us a lot about what to expect, the type of price action that we expect on the faster time frames. Right, so that's what I would suggest for those of you who possibly have the indicators. You know, use this on these 5 charts like this. It will give you an instant view of the price action, the volume, the multiple time frames, the important levels that you know, are coming up ahead, as it were. Based on the Camarilla, you've got you know, 2 sets of levels. You've got a set of levels based on the day and a set of levels based for the weeks. And you think, well, my goodness, it's both the R1 and the S1, and it's very close on the 2. Yeah, it can happen. But you know, look at the R3 and look at the R4. What this is also telling me, if it's between the R1 and S1 here and the R1 and S1 here, and look at that slither of price there, is this, what kind of a trading condition are we going to possibly be facing for this pair? I would say a bit, not tricky, but a bit sluggish, really not going very far. My final point about the pound is this, what I'm going to tell you about the pound. I was reading in my Bloomberg bits and pieces this morning, and it did make me laugh. Those of you who are in the UK will understand what I mean by this. There was a note on Bloomberg which basically said that the Sun newspaper had reported that there is going to be a Brexit deal by next Tuesday. And you think, well, what is the Sun? The Sun is a popular tabloid newspaper in this country. It's what we call a red top, not the sort of newspaper that one would expect to come out with a you know, with important economic Brexit news, which I think is a bit unfair to some of the readers of the Sun. The way Bloomberg reported it was a bit sort of sniffy, as it were. And it was very early this morning, and I mentioned David. I said, "Oh, David, you're not going to believe it, but Bloomberg have said that, you know, they've." I said, "I bet the pound's being bought at the moment, and that is probably one of the reasons why the pound was being bought this morning. So we may get a Brexit deal by next Tuesday, according to the Sun newspaper." So there we are. I'm going to pass over to David.